Hello and welcome to the start of a brand new week. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare and Jamie Pakenham-Walsh. Good morning, guys.
Morning, Joe.
Good
Morning,
morning.
Jamie.
Morning
How are we
all.
doing?
All good, thanks. All good in the hood.
Good.
Yeah, all good here. All good.
Glad to hear it. Okay, let's get stuck in then, shall we? Let's do the latest headlines first of all. So, strong US jobs data was posted on Friday. We had the non-farm payroll numbers increased to 431,000 for March, which was actually below the forecast consensus of 490,000. But the February increase was revised higher to 750,000 from the first estimates of 678. The unemployment rate declined to 3.6% from 3.8, again slightly below the consensus forecast, but all in all was seen as pretty strong data. That has led to an increased call for a 50 basis point rate hike at the next Fed meeting. San Francisco Fed President Daly stated that the case for a 50 basis point hike in May has grown given recent inflation and labour market developments. The New York head Williams added that the balance sheet runoff could also start next month. Markets remain more confident the Fed will now go for a 50 basis point hike in at the May meeting. So we've got nothing this month from the Fed. We have to wait now for May for the next meeting. Eurozone inflation surges to record highs last week. The CPI inflation number rose to 7.5% for March from the 5.9% in the previous month, and well ahead of that consensus forecast of 6.6%. So that will continue to put pressure on the ECB to respond. In the latest data from the Commitment of Traders reports, the data showed that there had been a substantial increase in short yen positions to over 100,000 contracts in the last week, which is the most substantial short yen position since November 2021, as the yen slide encouraged further selling. Possibly room for a short covering on that, you'd have thought, if there's too many people involved in it, but we'll have a look at the yen charts in a little while. There's also been further pressure over the weekend for more sanctions on Russia with Ukraine. Most attention has been focused on the allegations on war crimes from Russia with the Kiev area and especially in Bucha. Germany has stated that there will be additional sanctions on Russia, and developments surrounding energy exports from Russia will continue to be watched very closely. In terms of central bank action, we do have something this week, and that's from the Reserve Bank of Australia. They've got the decision, which is due out at 5 o'clock UK time tomorrow morning. So we'll be keeping watch on that. Well, I won't be because I'll be asleep, but we'll see the reaction to it when we wake up about an hour afterwards. So we'll see what they say in their commentary as well, and how they're going to start tackling inflation over there. So that's that. Let's get into some charts, shall we? Steve, what's cooking? What's going on? What's catching your eye this on the start of the week?
I think the main thing catching my eye on the indice front is the weekly chart. The weekly chart saw a clear rejection of the attempt to move higher. We went through resistance. This is on the DAX. We had previous support, which was clearly at 14,810. Three or four times is supported on a weekly basis, even five actually. And once we went through it, we've had this real extended move lower down to 12,500. And we had a retest last week, and that retest has failed. So for me, this is negative, and we've started the week on a slightly negative footing at the moment. And if we drill down to the hourly chart, we can see over the last couple of hours, we've seen a further rejection of a move, 14,567. We're trading 167 points lower than that, and we've been lower. So support coming in 14,324 on the DAX. And also, I'll take a look at NASDAQ. This was my gun-to-head trade on Friday. I think we're going to go for the same thing again. If we get rid of the, if we just focus really on what the price action has been in the last couple of hours, we see this impulsive move higher or corrective move higher, and then a stalling evening doji star formation on the hourly chart. And if we hop back to the weekly chart, there's this clear shooting star. A shooting star formation will be confirmed with a negative week this week. So that's what I'm going for. I feel like the indices potentially have room to move lower now, whether it be something to do with Russia-Ukraine or interest rate rises or whatever it may be. I don't know. But yeah, technically it doesn't look that great for the indices. Take a look at Bitcoin. Bitcoin's really trying its best to sort of push higher. Prices on this exchange got up to 48,234 before stalling last week and reversing. And we've got this head and shoulders formation. The neckline extended has been retested again, and this looks like a bit of a failure on the upside, and now looking for indications that we might have a bit of a turnaround. On, you can see the sort of like this shooting star candle putting a stop to the rally. Decent volume around this reversal, and we've gone sideways since then. So I think potential for further downside. I'm still got my negative hat on cryptos. We are at good levels. I think there's good risk reward to fading this move. On and then we'll hop across to oil. Oil rallied from the lows, and although we gapped open lower after the weekend, prices have extended higher, close to retesting the resistance around about $100. We're trading just below there at the moment, but again, still a little bit on the back foot. But a break above $100.43 on the WTI crude oil would be a positive turnaround. Let's get rid of that so we make it clearer. Put a little bit of a resistance line in there, $100.43. Break above there opens up the upside a bit, with some sort of rounding formation at the bottom here. So yeah, that's the first level to watch, and we can sort of like, we'll get a good inkling of where we go after that. On the weekly chart, it was a negative week last week, as we can see here. So on the downside, around about $97 will be the test of support, and currently trading just over $2 higher than that. On the gold, similar type of negative candle last week. Price action has held this morning. We've got a range of 1915 to 1931. Looking at the 4-hour chart, really on this head and shoulders formation for me is still intact and still has potential after the lower high was posted. Yeah, but still waiting for that to have a clear break and a drive lower. Support coming in currently at 1915, and then we've got 1890 and resistance coming in at 1950. So a break either way should see an extended move. That's about it.
Nice, thanks, Steve. Okay, let's take a look at FX then. Let's get the charts ready. So starting off with dollar index. So still trading in this kind of consolidation phase following the breakout from 97.72. We saw highs of 99.42, but then we've seen prices continue just to move sideways really. But all in all, still trading in this bullish channel, so still expecting to see higher prices. On the front foot today, looking to post 3 consecutive days of gains, it would seem at the moment. Looking at the euro versus the US dollar, that continues to trade in a downtrend and very much in a consolidation pattern at the moment. The bias would be for a break to the downside of this kind of wedge pattern or flag potentially that is taking shape at the moment. So looking ultimately for lower prices towards kind of 106.40-ish on euro US dollar. Taking a quick look at cable to start the week, not really much going on here, still in again a consolidation kind of phase, very choppy. Overall trend remains bearish, still looking for lower prices down to this 50% fib level at 128.46. Just following on from the data that we saw out from the CFTC report, this is a yen basket, so we can see here how weak the Japanese yen has been. and we saw that the amount of short positions that are currently being held according to the exchange data is at its lowest, or sorry, the highest amount of short positions held since November 2021, which was here. So we can see this was off the back of quite a lot of selling, but that looks as though it actually called the end of that move lower and there was a little bit of a rally to the upside. So not sure if we'll see something similar. I always get a bit scared when you see too many people are short, or when you see record amount of short positions, because it means that there's going to have to be a lot of unwinding if there is any move to the upside that's going to spook these short traders out of their positions. So interesting to see how things play out here. This is the daily chart on the yen basket. Really kind of choppy moves around here, following this obviously big slide to the downside. So would be a little bit cautious about continuing to short the yen here. I think it looks like that is maybe a little overdone, and there could be some room for a little bit of a corrective move higher. Clearly, the overall trend remains very bearish. So I think any move to the upside is likely to be short-lived, but I'm not sure I want to be playing with it around here on the short side, if I'm totally honest. And if we scroll back to the left-hand side, just to see when we were last at these levels, we have to go back to sort of 2015, 2016 to see the yen basket down at those sort of previous levels before it eventually formed a reasonable looking bottom pattern there on the daily chart. So yeah, that's it from me on the FX. Jamie, I'll chuck it over to you, and you can talk us through some stocks that are catching your eye.
Cool, thank you, Joe. So first one we're going to take a look at today again is AMC, just because we had that quite interesting move last week where it broke out from this double bottom type formation, broke above this kind of 21 resistance level and really shot up. But towards from Tuesday last week and all throughout the rest of the week, we had a period of selling. So that makes for an interesting weekly candle, which shows this clear rejection of these higher prices and forming a bit of a shooting star type candle. Now I'd expect to see some kind of buying pressure come back in at this 61.8% fib here. Whether that rally will be substantial enough to kind of get back up to these 34 highs remains to be seen, but this is where I'd expect the buyers to come in and try and defend this level. We'll jump over to Alibaba quickly, and I wanted to touch on a couple of things here. I think this is one we spoke about a little bit at the start of last week, but I thought I'd talk about this head and shoulders type pattern. Now I say type as Steve correctly identified last week that traditionally head and shoulders are kind of like a reversal pattern, so they kind of signify the end of the trend. But what I quite like personally, even one during a trend here, so we can see we've got this clear downtrend. This is a weekly time frame. It's a clear downtrend for Alibaba. It's been really struggling, but it shows the psychology of the market to me. And I think this is one we actually traded and put on our, or set an idea for, I should say, and put on our dashboard. Because for me, what this shows is we've had all this selling pressure. The buyers have tried to come back in and take control. The sellers have then pushed it back down, and then the buyers have struggled to get it even up to that level. So that to me suggests the sellers are still in control. And we did have a nice breakthrough here and an extended sell-off, kind of hitting that measured move, which would be from the top of the headline, the head to the neckline, and you extrapolate that and it comes to, well, I'm not very good with the tools on here. Let's see if I can do it. So we're looking for something like this. So you can see it clearly kind of got to that target down here. But that's quite an interesting one. And as you can see, I think we mentioned this last week, but we've had this series of buying pressure now down here. And this to me is much more interesting because we're getting this really good volume into the market
Just an
now.
interesting one on that, Jamie. I saw
Mm.
something over the weekend. I'm not sure if it was on Twitter or somewhere else, maybe an advert for Saxo Bank. And it was the amount, the most popular holdings in people's ISAs, and Alibaba was actually the top holding, which was bizarre.
Really
I thought, yeah.
interesting. I mean, I wonder kind of where people have got in and whether it's sort of trapped kind of forced investor type people, because obviously I had this really good extended run up throughout the last 5 years, and then just 2021 has just absolutely tanked. So
I imagine the average holding price is probably above 200 for those ISAs.
Yeah, I was thinking the same
Sadly.
thing. Yeah, but it does look like we're getting some buying come back into the market. So hopefully, if anyone out there is holding Alibaba, we can see a bit of a turnaround here. We'll quickly jump over to Robinhood, and this had its IPO earlier in August of 2021. Really tough if you decide to buy off that, because it's come all the way down to current price about 13.90. But what kind of interested me here, and there's not too much to talk about because it's still in this real downtrend and it's been struggling, but similar to Alibaba, it's had that period of a sell-off. But one of the things is I always go on about, I look for is the kind of volume, and the volume on the days where the bulls win. So we've got these higher volume days, and particularly this one last week on the 29th, where the volume really picked up and the bulls really in control. So before kind of getting a bit more of a bullish picture on this stock, I'd probably like to see this high break here. So we kind of got that lightning bolt action to signify a change of trend. But yeah, I mean, personally, I wouldn't be looking to kind of go anywhere near this for a little while because it's still in this real extended downtrend. On the flip side to that, and I thought I'd bring up PayPal quickly because it's kind of the opposite from that kind of bottoming perspective, because we have obviously PayPal had a really nice run up and it did really well during COVID, and it's really struggled coming to this year. We've had a number of gaps down. I think a few on earnings. We have first one was kind of up here. You can see that there in back end of July. Had another one in November, and we've had the most recent one of this earnings report at the start of February. But what I don't like about this, we still haven't had the kind of buyers come back into the market. We've had lots of high selling days, mainly on the earnings reports, which have been quite bad for PayPal. But we are kind of at a previous support level from back in COVID lows of March 2020. So we are at a relatively important level for PayPal, but the way it looks technically at the moment, I still think this has got room to go lower. It has broken this kind of recent swing high, which is, I guess, positive on the short term, but still for me, there's not a lot here which looks particularly good at this point in time. We'll have to see how price action develops, but right now PayPal is one that's really been struggling. That's pretty much it for me on the stock front.
Nice one, Jamie. Okay, let's take a look at the gun to the head trades from last week. So just a quick refresher on what we do here. So each of us pick a trade idea live on the video. Each idea must have a stop and a target. All the ideas are placed at market, and the trade ideas expire either at 9 p.m. UK time or when the stop or the target is hit. So just trying to test our skills as analysts by picking something right now without any kind of sort of run up at it, if you like, or any sort of real analysis going into it, just picking something that we like, that we think has got a chance of making money over the next few hours or so. So just a quick reminder on how we did last week. On Friday, I went long of New Zealand dollar, US dollar, which was stopped out. Steve went short of NASDAQ and he made just over 1 hour on that one. So well done, Steve.
Nice.
And Jamie, you had a tiny loss on Aussie US dollar for 0.07R. So collectively, we pretty much cancel each other out on the session. All in all, last week, I think it was pretty good for us. Looks like we did okay. So start of a new week. What do we fancy this week? Steve, you've already suggested you might be having another crack at the NASDAQ. Is that what
I
you're
think
going
so.
for?
It is. I just sort of like hop into dollar yen. Hang on, let me share my chart.
Yeah, that's me.
When you mentioned dollar yen, the real formation that's sort of highlighted for me on that dollar yen, like you're talking about potential for a reversal now if the yen shorts are at record highs. The obviously head and shoulders formation looks prime. We'd need to get a break probably of 121.30 and a close below there on the 4-hour chart. A decent close below there would sort of confirm this reversal formation. So definitely one to look out for. Yeah, it's when there's record shorts, Joe, I agree. It's definitely a time to be slightly concerned. Yeah, that would signify a measured move correction down to this 117.70, which I highlighted way back in. It wasn't way back. It was just last a couple of weeks ago. Yeah, but I'm going to go with. I think I'm going to go with NASDAQ. It's sort of, for me, again, you've got this head and shoulders type formation potential. On the 1-hour chart, yeah, I was a bit gutted. I got right down to, I was about I was about 3R on side at one point on
Move the
Friday.
green up from the bottom and it'll tell you from the to your low. Yeah, 3R.
Yeah,
That's a
at one
shame.
point 3R. Never mind. We go again, and yeah, this hourly reversal for me gives a good opportunity, risk reward wise, to get in here, have the stop quite tight. Let's have a look. Yeah, nice. We'll go for this one. It's getting short at this level here, 14,848. Targeting a move to 14,608, and the stop is at 14,908.
Perfect. 4 to 1.
Very nice.
Jamie, you got one ready?
Yeah, I do. I know I can't remember which of you was talking about being negative on the indices, but I've seen quite a nice little intraday setup on the Hang Seng this morning. We've had this series of kind of higher lows on an intraday basis, forming an ascending triangle type pattern, which is trying to break out of at the moment. So I think I'm going to have a go at buying this. My target is going to be this kind of previous support level of 23,334. I'm going to hope this kind of extends higher. This previous resistance here has been pretty strong on an intraday basis, for the last week. But it seems like the bulls are in control now. So I'm going to have a crack at buying this at 22,445, with my stop at 22,247 and my take profit at 23,334 for a nice 4.25 risk reward ratio. Wow, that's a bit of a tongue twister. Got there.
Nice. Okay. Yeah, it looks like we're all going indices today then. I agree with Steve. I can't sort of see past some of these indices really. They seem to be at the moment looking like the most obvious option for me, certainly just going by the hourly charts. So I'm going to take a look at the S&P 500. So we've got a short-term uptrend here, which is broken, and we've seen a nice retest of this, which the price has been unable to overcome. So I'm going to sell it at 4539, stop loss at 4562, and I'm going to target a move down to, yeah, that'll do, into these lows here, which is at 44.55. So looking for 3.83R on the S&P 500 today.
Very nice.
So that's that. Okay, data-wise today at 3:30 UK time, we've got the Bank of Canada Business Outlook Survey, which is the only high-impact bit of data due out today. Some key events to watch out for the rest of the week, as we spoke about. We've got the Australian Reserve Bank policy decision, which is out at 5:30 AM UK time tomorrow. We've got some Federal Reserve minutes on the 6th, so that's Wednesday night, and then we've got the Canadian Employment Report on the 8th, which is the Friday. So a couple of bits to keep us interested this week. And that is pretty much that. Anything else to add, gents?
No, that's all good.
Superb.
No, good for me.
Okay. Cool. Hope everybody has a great day, and we'll be back tomorrow morning.
Cheers.
Bye.
Thanks, everyone.